Hello, everybody. We have a treat today. I started following Trader Vic in the 70s, before CNBC, when it used to be the Financial News Network, Vic.
Right.
Welcome to TradeGATEHub, and appreciate your time for edifying us today. And for those of you who don't know Vic, you ought to learn about Vic because he was one of the pioneers in developing different methods for trading. You could see he's a prolific writer. Look at all the books you wrote, Vic. I've tried to write, and it's tougher than most people think. I was able to write a blast at a time more than a theme. Did you find it arduous, or did you enjoy it?
Yes, I did find it arduous and surprisingly difficult to start and get to the end and have it coherent.
Yes.
It takes a lot of planning.
It does. And is this your last book, Crash Maker, A Federal Affair?
Well, it's not
Fiction?
really the last book. That's a fiction book, but
Okay.
it was written in the early 2000s.
Okay. All right. So I want to acknowledge that the last time we talked, and I believe it was January, February, well before the invasion. And I asked you this question. I said, Vic, so are you a believer in 120 crude? And your answer was, quote, yes, by March. So, great call on that. That was something that you had no hesitation of saying, how some people hedge their opinions. Well, yes, it could go to 120 if there's an invasion, but won't if there's not. So I think you had a pretty good idea that what Putin was setting up for, he wasn't going to just spend all that cash and do nothing. So what do you think about crude from here? We had a little bit of a pullback.
As Vince Lombardi said, football is about blocking and tackling. And the rest is superfluous. I mean, you can add, subtract, great quarterbacks, etc. But if you don't have blocking and tackling, great quarterbacks don't do too well. But the key is, in this case, understanding the fundamentals.
Okay.
The fundamentals are that the climate change concept, which I'm cynical of. If you want to ask me about it, you can, but I don't want to get into politics. But that concept of stopping the use of fossil fuels.
Right.
If you look into, and I beg all your listeners to try to investigate the uses of energy, you'll find there are 35 different industries, 35 without maybe stretching it, that use 1% or more of the energy that is produced. Cement, for example, uses 8%. So if you stop fossil fuels from being produced, the amount of solar and wind, and they even stop nuclear, but solar and wind, it's not going to do it. We're going to go back to the caveman days. You can go 90 miles using the greatest batteries known to man in a 737. You go 90 miles. Then you have to land and recharge. The world does not work without energy, and energy in bulk, about 95%, comes from fossil fuels, which is coal, natural gas, and oil. So
drill, baby, drill. And that's not, I'd love to hear that again. And I guess, it's hard not to talk politics, but it's the current administration really ill-prepared. And it's not just U.S. How about Germany, Vic?
Right. No, the whole world is caught on, the Western world is caught on to the climate change, let's say, concept of control and raising taxes. That's really what, to me, it's all about, is raising taxes. But see, China, of course, they have their own rules. They don't play by the rules, and nobody critiques them. So does India. I mean, they're not going to stop using fossil fuels until they feel like it. So this is really one-sided, and it basically is something that's, as I say, it's a very easy call to be long.
Self-inflicted wound.
Correct. And be long energy still, I still look for it to keep going up. It now with the war aggravating it, okay, with the not wanting to buy Russia oil is aggravating the situation. It doesn't help anybody. And let me give you something you don't read. So I throw out things that I think are a little off base that you don't see every day. If Russia can't sell its oil, what happens to the value of oil? Well, they have it in the ground. They restrict the use. The amount of the price of oil goes up. So their net worth, their reserves in this case, goes up. What can they do? They can borrow against it. They can go to China and say, listen, you look to sell some of that 1.1 trillion of dollars, put it in rubles at 20% and get rid of the 1.5 to 2%, and we'll borrow the money from you, and you can take it in oil as we pay it back, and we'll negotiate a price of oil in a contract form that's a discount. See, we've been embargoing Cuba since 1962 or three, and the Cuba's still there. They still sell cigars all over the world, not to the U.S. They exist. You see, these kinds of things never work.
I wanted to, yeah, and I wanted to ask you about something else related to it. Since the U.S. weaponized the SWIFT system and freezing assets, I'm sure does not instill confidence in people that might not see the world the same way as us as staying in the system. And I wonder what you think about, we put on these sanctions, and is Russia going to default? We actually use some of their funds to make an interest payment, some of the funds we froze. Do you think so? If Russia defaults, who takes the hit? Who's the IMF?
Well, I know that exactly. We're concerned about that. That's why they let them make the interest payments, but they're not going to default.
Okay.
They're not, like I just said, they have all these assets. It's not like you don't have an asset. You can go to a number of different countries, Saudi Arabia being one, and they will loan you money against the collateral of what you have in the ground that hasn't been sold yet. It's ridiculous that they have a very low debt to GDP anyway. I think it's 20%. So they don't have much debt. But the point is, what we are doing is making what they own more valuable.
And look at the comeback of the ruble here, Vic. If you see my screen, a lot of traders say, yeah, try and make a trade. The spreads are so unbelievable, and most brokers aren't letting people trade the ruble. But this was the invasion day right here, and they've recouped almost all the losses on the invasion.
Correct. They have a great central banker, Russia, and also they, as I said, when you pay 20% on your deposits, if you're China and you're buying oil from Russia, why wouldn't you buy the ruble and get 20%? You see, it's insanity to not understand these go-arounds, and it's economic for anybody that is able. Now, again, I'm not able to easily buy rubles because they restrict Americans from doing that. But I'm saying if you're China, you could buy all the rubles you want and you get a 20% interest rate. I mean, why would you keep treasury notes at 1.5 to 2? It's suicide for the West.
Okay, so something else you brought up. So I thought of you a few times in between our conversations because of market events, and there was a news flash when I had spoken to you earlier, Vic. You said I was asking you what could upend the dollar, and you brought up the poor relationship between the current administration and Saudi Arabia. And when you brought that up, I saw a news flash that said Saudi Arabia will accept yuan for payment in oil. And I was thinking of what you said about Saudi Arabia. They haven't stepped up production to try and help at all either. They're raking it in. So is the acceptance of yuan for payment one step to pricing oil and other things besides the dollar by
Yes, it
Saudi?
is. It's
Okay,
it's the handwriting on the wall, and it's showing you. Now, again, just to put this in perspective, the reason that BMS is the way he is in Saudi Arabia is because we criticized
right,
the murder of Khashoggi. They looked at it as it's their business. This is not your business. Now,
right,
murder is murder, but when you insult countries because they believe they have that right, I'm not saying it's good or bad. I'm not trying to be moralistic here. I'm just trying to say that helped destroy the relationship. Plus, the mortal enemy of Saudi Arabia is Iran, and we're
right.
negotiating with Iran.
Yeah,
And what else would anybody do that's a young king in Saudi Arabia? Now, let me tell you what I would do, and I'm not projecting this as something they'll do, but to me, this is the direction. I would go off the dollar as pricing for petroleum, and I would go into a basket of currencies and gold. So I'll make this up. I'm not saying this is correct, but let's say 10% dollars, 10% euro, 10% yen, some Mexican pesos. Go around the world, add bits and pieces to how you'd price a barrel of oil, put 10% gold, 5% silver. See, now you're diversified if you're Saudi Arabia. You don't need anybody, and now you've effectively killed the U.S.
yeah,
because it has huge advantages. But if you look at what Canada did, okay, Canada basically froze the accounts of people, which is what the SWIFT system attempts to do. We don't like what your behavior is. You're out of the SWIFT system. So when Canada did that, and you noticed he changed his mind in 2 days. 2 days, he put the act on again, and then he took it off. Why did he take it off? Well, if you research it, you'll find that 500 billion of Canadian dollars, now much different than US, there's only 35 million people in Canada, left the system. In other words, withdrawals came from all over the world. You're going to
yeah.
be a tyrant and take the money. We don't know if you're going to take our money.
Right.
We're gone. So
Trust is broken.
then he reversed it. So all of these political decisions have long-term economic consequences. And that really is what we should learn from this. And that's going to occur, in my opinion, at a slightly slower rate in Saudi Arabia. Of course, we were in theory protecting them, but when we're negotiating nuclear weapons for Iran,
For
we're
oil.
not protecting them anymore. They'll go somewhere else. They'll go to Russia or China.
China. Yeah. Interesting that you bring that up. So with all of these things going on, bond market, Vic, everyone's bearish bonds. There are lots of great reasons. Here's a look at the TLT. It's a proxy for 20-year treasuries. I'm assuming that you're very bearish treasuries, and there are a lot of people talking about a sovereign debt default. But could there be a vicious bear market rally because everyone hates them down here?
Yeah, well, the rally will come. Now, here's some, again, fundamental information that will drive the future. They're talking about 7 to 9 rate increases. I believe the Fed used the number 7. The last time the U.S. increased rates 6 times was 1994. In 1994, under Clinton, they raised rates 6 times. There was no recession, but they lost 54 seats in the House, 8 Senate seats, and 10 governorships. Because when rates go up, it angers many people for many reasons, even though there wasn't a recession. So if the Fed, to me, it has to know this. It's talking the talk, meaning it's trying to kill inflation expectations by using this language. They're lucky if they get the 3 rate increases before the markets collapse and they have to then reverse. Now, the key is the bond market will go skywards if they ever reverse. In other words, if they say, okay, well, the economy is slowing at such a material rate, we're going to slow down our rate increases, you'll see a rally in bonds that will just be gigantic. You have to go back to 1982 to see a bigger increase. So the key is, yes, bonds are going down. There's no way they go up unless there's a change. And what would that change come from? A much slower economy due to economic circumstances.
So I've heard Peter Bookvar says that the Fed is not data dependent. They're S&P dependent. So
right.
What's it going to take in the S&Ps? And, we're having this nice little bear market rally, or, here's another $1 million question, Vic. These lows that we put in here on the wedge, is this going to be a push to new highs and have one more confounding rally because the only reason stocks are going up because no one likes them, because everyone's turned bearish? Or the reason bonds rally is because we top out here in the next month or so and then crack 4,100 and head towards that 38, 33 handle?
Okay. I believe this is a bear market rally. I believe the rally is taking place because they only used the words of we're going to increase rates in small increments. That is not going to stop inflation. So if you look at England, for example, and they've raised rates in reality 3 times, and you look at a chart on the FTSE, it is by far acting the best of all the world markets. Why? Because raising rates is basically slowing loan demand. If you Google Fred industrial and commercial loans, you'll get a chart of the U.S. and you'll notice that industrial and commercial loans topped 2 years ago.
Right.
So it isn't loan demand that's driving inflation here. You've got velocity at 65-year lows. You've got inflation because of supply issues and because the government, okay, and this is, I should have put this first, the government just did another $1.5 trillion. They're spending money. Now, when they spend money, it has to be funded. With the normal funders are the Fed, but the Fed doesn't have to fund it. The commercial banks can fund it. They can print money too. So they basically print the money. Now, I don't know if your listeners are familiar with what's called hold to maturity accounts. They're basically, their law change that was in 2014 that gave banks the ability to arbitrage the buying of debt. They have no risk. So if I'm Chase Bank and I buy a 10-year, I put it in the hold to maturity account. I have no reserve requirements. I'm exempt from Basel III. I print the money. I arb the interest. It's basically that simple. So banks can print money too. The Fed is not
based upon their loan, based upon their deposits. They can loan out 10 times.
Yeah, but they can print the money. Today they print the money to buy those bonds. Wow. So it's not based on deposits. It's based on, you want to borrow money, I write you a check as a bank, and I make the money up just like the Fed does. Okay, that's the way the system works.
Wow, and so monetization of all this debt will not stop with the Fed raising rates, because commercial banks will step in and monetize.
They can monetize it, and the issue is not borrowing money. Like I say, loans are declining. It's,
Right.
just the point is, this is a problem of the government spending more money than it is allowing the economy to produce. So these
Right.
deficits are funded, they're printed, and basically add to that the shortages that are being developed for all kinds of political reasons.
Yeah. So demand destruction is the only way out of a supply shock.
Yes, that
So
would be
do
the
we
end
go to
result.
gas? When do we go to gas rationing, Vic?
Well, I can't answer that one. I don't have a handle on the amount of physical oil that's available that we're producing and that
Yeah.
we have access to get to that number. So that one I can't answer.
Okay. I'm assuming you still like precious metals. I mean, that was going to be in the basket. And also, Vic, when you bring up what you would do if you were Saudi Arabia, doesn't the IMF have something similar set up already in an SDR based upon each country's GDP, what portion they would be of that?
Yeah, the only thing is with the IMF, they're doing the same thing that governments do. They're basically saying paper. You should accept paper. If you the example I gave with Saudi Arabia is, I'm Saudi Arabia. Okay, I want to protect my interests, meaning I'm giving you something that we have that's precious, that it is declining every day in the quantity we have it. So I don't know which country is going to basically inflate more than another. So I create a basket of currencies that prices a barrel of oil. I include oil, some gold and some silver, and I'm covered. Now, what the IMF is doing with these SDRs is another magician's trick. Look over here, and I mean, it's not. It doesn't really slow down inflation because all those IMF SDRs are made up of paper currencies, but it's not
They have
like
no metals. They have no metals.
Correct.
Okay. So here's gold. Looks a little bit like crude, spiked like crude, pulled back. This is a major breakout that technicians will turn kind of bearish on this. Again, could this be a failing rally and gold gets cheaper one more time into the summer?
Well, I believe that gold and silver, like most pros, like most people like me, they would say is most undervalued assets in the world, which they are. And I believe that this will be a real bull market in gold that'll go above the peak that you've just made at 2080-ish or thereabouts. And the reason is because you've added a new dimension here, the war in Ukraine, which is also now going to cause shortages, more printing of money.
Yeah.
So I believe that this could be a real bull market in gold.
Okay, so buy any breaks. And you know what, Vic? Actually, I follow the miners too. And the miners were underperforming gold for the last couple of years. That's reversed. The miners are outperforming. You could see like Newmont's almost back at the high, while the gold is still $100 or so under its high. So miners, it doesn't take a lot of money to move these mining stocks. It's maybe all the miners on the map don't even have the market cap of one stock like IBM. So it's not going to take a lot of money flow to move them.
Exactly right. And the miners will move faster because, again, they have leverage. In other words, 1 ounce of gold in their mine that they're going to bring out of the ground is going to be a multiple of earnings to their stock. That's why they move faster both ways.
Okay, and here's uranium. A lot of people are talking about going back to nuclear. There have been better performers like Cameco. This is a trust. You believe in the uranium play here?
Yes, I do, because the reason is, and there's always a reason, because if you want to get off fossil fuels, you can't go to solar and wind. You have to go to nuclear. So I think when the people really get go crazy over what they're going to see. I know a friend in England, his energy bill, he's been told April
Yeah.
1st will go up 54%.
Yeah.
So, I mean, people are going to complain, even though they don't want nukes in their backyard. The bottom line is there's no place else to go. If you want to slow down fossil fuels, you got to go to nuclear fission.
Okay. Speaking of nuclear, do you think that Putin, really, let's talk just quickly and wrap it with it, is that his initial attempt militarily has failed, hasn't it? That he's pushed back and now he just has to lob bombs from his side of the border?
Well, this is a complex question because you're getting into tactics, war tactics. Klivovich was a major Prussian general. He basically said, "You don't attack the people; you attack excuse me. You don't attack the cities; you attack the armies."
Right.
So, in my view, and again, I'm not a general and a war tactician. He's basically not wanting to harm the infrastructure per se. He will if he has to, but his general goal is to go after the Ukrainian army and leave infrastructure alone. And he doesn't want to bring tanks in, and he doesn't want to go door to door. I mean, he wants to change the Ukrainian government to be pro-Russia, but he doesn't want to necessarily take over Western Ukraine. He wants it to be neutral, and that he can do with a pro-Russia government. So again, there's lots of conversations about this because you only hear one side. You only hear the Western side. You don't hear the Russia side of what they're doing. They won't tell you anyway, but the point is that what you see in the press. So it's a complex question, and everybody has to do the research to come up with their own answer.
What do you foresee as the end game here? How do you think? Do you think it's going to end in a treaty like that?
Well, it's going to end with Russia winning. That's 100%. They can't lose. They can't lose. They're 100%. And if they wanted to stop people from dying, Zelensky has to go and he has to give Russia what they want.
Okay, Vic, thanks. It's not the most comforting subject to deal with and talk about right now. I appreciate your input, and you know what? Great conversation again, Trader Vic, and it's always great talking to someone that I hoped to be like one day when I was watching you in the 70s. And you know what, Vic? I don't give up. I'm still trying. So.
Well, thank you. That's too kind of you.
Yeah, you clarify things and you don't pull punches. And I really believe that you've given some people some food for thought here in the last 30 minutes. I appreciate it, my trading warrior brother.
Okay, one last comment.
Go.
Commodity inflations and inflations in general.
Yes.
Because they're one of the same. I'm just parsing specifically commodities. They don't just die. Okay, they will continue on their way until you stop the fundamental reasons that are causing them to go up, and that is huge government spending, very low interest rates, and basically a
supply shocks.
Supply shocks because again, economically, for example, in the U.S., I just repeat this, climate change policies dominate. Therefore, they're against drilling for oil. You're not getting supply. Everything derives from oil. Everything you do, just believe me, it's a virtual fact. Everything comes from the use of fossil fuels.
I'd also be very important for this war to end and to get the Ukrainians and Russia back in the field so that we don't have hunger and starvation across the planet in the next few years.
Correct. And it's sad to see the leadership around the world being so egotistical. They won't sit down and talk about peace.
Peace to you, brother.
Peace to you. Thank you, Dale.
All right, Vic. Everyone, Trader Vic, you could follow him at Victor Sperandeo. Go to his website. He's got great articles on energy prices. And if you're strong enough, you could read about what Vic thinks the end game is. So it's not for children. And thank you so much, Vic. Great talking to you.
You too. Take care.
All right. All right. So that's a wrap, everyone. Hope you've enjoyed it. And Mike will be up in a little bit, and I'll see you next week. So everyone, like I say every time I talk to you, don't just count your pips, count your blessings. Adios.